Hey friends, welcome back to the channel. My name is Sanjay and today we're going to talk about ethical investing ETFs, both for ETFs that are focused on Australian investing and ETFs that are focused on investing in countries outside of Australia, and you get that international investing flavor. Now, I'll throw up a list of all the ETFs that you can look into around ethical investing, but in this video, I'm actually going to focus on 4 ETFs from 2 different companies, from BetaShares and Vanguard. So the 4 ETFs are FAIR and ETHI from BetaShares, Australian focused and internationally focused. And then from Vanguard, VETH and VESG, again, domestic and internationally focused. And usually when I look at comparing these ETFs, I always do them on this kind of table of comparison. And I'd encourage you to do the same because you shouldn't look at an ETF in isolation. Often ETFs, or there'll usually be a combination of ETFs that will all do the same thing. And the best thing you can do is have a look at them all sort of side by side to the best of your ability to see what's what and which one you might prefer. So the first thing you see from the BetaShares ETFs is the large amount of market cap that they have compared to the 2 from Vanguard. And it makes sense, they're quite popular, probably because they're the most purest in terms of what I would consider ethical investing. And again, this is my personal opinion. It's different. You might consider certain things should be included and certain things shouldn't be included. But you can check the documentation to know exactly why. But I find FAIR and ETHI seems to find that right balance of including only companies that seem to do right by what human beings maybe consider ethical. So you can see the companies within FAIR, Sonic, Telstra, Goodman, CSL, Fisher, ResMed. So you've got a nice combination of companies that do a lot in the healthcare space, a bit around diagnostics, hearing aids, Fisher, CSL, blood products, vaccines, Australian Stock Exchange itself. These are all reasonable companies, commercial real estate, fair bunch to include. And then on the global ETHI side, you've got Nvidia, Apple, Home Depot, Visa, MasterCard. So no social media companies, no dodgy weapons manufacturing companies. That's sort of the branding that BetaShares is trying to go for. It's very pure in what I would consider they're trying to achieve in terms of their ESG investing. However, look at the fees compared to the other 2, the 2 from Vanguard. You're paying quite expensive rates in terms of management fees for the BetaShares products compared to the Vanguard products. And Vanguard has a very, well, look, it's not Vanguard's fault, it's FTSE's fault for what they've defined as ethical investing. But when you look at the Vanguard ETFs, you don't see Rio Tinto and BHP in there, but you see CBA in there. Now, you might think CBA is not that bad, but there is a certain narrative out there where people will say, well, you shouldn't invest in the big 4 banks, mainly because they're the big 4 banks and they've got so much negativity around them, but also because historically they've given loans towards unethical things like maybe coal mines and things like that. Now, I'm not sure exactly the detail, but it's generally why people don't like big 4 banks. And within VETH, you've got FMG and NCM, but not the coal miners like BHP and Rio Tinto, although I think they are trying to exit out of it. You've got iron ore and gold and copper in there. So that's suddenly considered more ethical. And then again, in terms of VESG, the international flavor for the Vanguard products, you've got Amazon in there, and that's suddenly considered ethical, where under ETHI, it's not really considered ethical. So this is the balancing act that you sort of have to find when it comes to ethical investing is what would you consider ethical, and then finding an ETF that helps match your desires. Now, going back to the fees, one thing I don't understand is why you should be charged more for ethical investing compared to not ethical investing. What I mean by that is when you look at FAIR, what it's really competing against or what it's trying to tidy up is the ASX 200. So you're saying instead of investing in all the top companies in Australia, we're going to try and get all the ethically relevant companies in Australia. Now, when you look at the A200 list of companies and you look at the list of companies in FAIR, you actually find a bit of overlap, meaning there is 69% of the companies in FAIR are also in A200. However, you pay 7 times more in fees for FAIR because it's ethical. Now, remember, when you're actually investing in the stock market, when you go to your broker and you say, I want to buy CSL or you want to buy BHP, your stockbroker won't charge you a different amount of money for those. They don't care. They'll charge you $20 brokerage fee whether you're buying an ethical company or an unethical company. Now, I know the index providers might have different fee structures, but for whatever reason, this is why I sometimes get a little bit fired up around ethical investing, because I think they tend to rip us off in terms of it, because they know, hey, we want to be more ethically minded, so we're willing to pay a little bit more. But it doesn't make sense why FAIR should have 7 times more in fees, even though you have quite a lot of overlap with A200 anyway. Now, I've included the returns along the bottom, but again, as you can see, they're broadly achieving the same. 18% on the Australian focused ones and a little under 30% on the international focus ETFs. Be careful though, these are unhedged versions. Now, I believe BetaShares does have a hedged version that just removes currency impacts on your investment. I have done videos in the past around the whole hedge unhedged. It just means instead of you having the returns of the companies and the currency impact your investment, you just have the returns of the company itself that you're invested in, or the underlying companies you're invested in. So here's how I would boil it down. If you're purely interested and you really want to be really strict and clear cut in your ethical investing, the 2 BetaShares products are fantastic for that. I think it's the most purest in terms of ethical investing. You can't really fault them in terms of how they've picked those ETFs. Remember to check the documentation. However, you are paying a little bit more in fees, quite a lot more in fees than some of the other ETFs out there. Now, on the other side, if you're generally interested in ethical investing, you're not too fussed on specifics around exactly which companies are included and not included, you just want to have a bit of an ethical lens to your investing style, go with the Vanguard products. Much more reasonable fees, but it may not be the most purest form of ethical investing that you can find out there in terms of the market. Hope you enjoyed that video. See you in the next one. Bye for now.